Okay, so in our today's class, we'll be talking about something very similar. We have spoken about it even in the course of this class already. And it is basically other audit services that are not audits. Okay. In our chapter 1, we mentioned 3 of them. Who can tell us the 3 of them that we mentioned? I'm listening. No? What were the 3 that we mentioned that are audit-related services but are not necessarily audits? What are the services that we mentioned? Audit-related services but are not audits. Anyway, let me show you. There are 3 of them. Review of data, agreed upon procedures, and compilations.
And you are supposed to say where you go, ask me.
Mr. Hussein, please mute. So there were 3 of them. Review of data, agreed upon procedures, and compilation. Do we remember now?
Yes.
Since you say you remember, what is the meaning of an agreed upon procedure? Victor, Grace, let me look for frequent faces that I've seen in class. I think Anthony too. I need you guys to explain this thing because we did it in class and it was literally a short class because this was what we did. So I want to reference this before we go into our main topic. What is the meaning of a review? What is the meaning of an agreed upon procedure? And what is the meaning of a compilation? Let me talking to myself.
It's already showing on the screen now.
Okay, let me just move up.
The meaning of
Explain it to me. Explain it to me. I'm not asking you to say what is the material. I'm just saying that what do you like when somebody tells you that, oh, what's happening is basically a review, is not an audit. When somebody says that we went to work at this place, but it was mainly an agreed upon procedure. When somebody says that, okay, the work I'm doing here is compilation, what does it mean and what does it translate to?
Okay, a review. The review is when the auditor or the accountant give a negative form of assurance.
Yeah.
Like saying that okay, he has checked all the data or whatever, and nothing has come to him to express and nothing has come to him to show that there's any material misstatement or something like that.
Okay, that's very correct. So a review is basically a check on a financial information, right? And for a review, one thing about it is that the opinion usually expressed in negative form. Okay, the opinion in a review is usually expressed in a negative form. And another thing is that reviews take shorter time, and of course, the level of assurance that comes from a review is lower than the level of assurance that comes from an audit. So while an audit will have a reasonable form of assurance, a review has a moderate form of assurance. Okay, that's very good. Thank you, Sochi. Another person, what is that? What are agreed upon procedures? I have 12 people in this class, so hello.
We are with you.
They're not with me. They just connected, and that is what students need to learn, especially in an online class. There is no justification that because you joined this class today, you know this topic. Your responsibility is to interact. It is a class, it's a physical class. You don't just join a class and leave the person to be talking, because I'll just be talking over your head. So I'm going to need people to unmute because we're treating what we have talked about in this class before.
Okay, can I try agreed upon procedure?
So no other person, Mercy, Ibukun, Grace, Ayodeji, nobody knows what agreed upon procedure is. Nobody knows what compilation is. Okay, thank you, Soji. Just continue.
Okay. Can you hear me now?
Yes,
okay,
I can.
agreed upon procedure. Okay, I will look at this from the angle that okay, a client has hired an accountant to carry out an engagement, and in which case the client specified procedure that accountant should use in the engagement. I think I don't know if that's correct.
Yeah, that's it. That's what it is. Very simple. It's that a client engaging an accountant, but telling him the procedures at which he wants the accountant to use to carry out that particular service. That's what it is. And because it's an agreed upon procedure, there is no form of evidence that comes from it, because you are sending me on an errand and you are telling me that, okay, go and cook this spaghetti, put this first. If I come back and that the food was not sweet, can you tell me that it was me that did not cook it well? No, because I followed your instruction, right? I followed your step-ins. So because the responsibility now is being pushed to the client, what is basically happening is that there is no form of assurance that can come from an agreed upon procedure. Okay. And the third one we have is compilation. Compilation is getting an accountant to prepare the financial statements or prepare the financial information on your behalf. Okay, that is what a compilation is. Getting the accountant to prepare the information on your behalf. So I just wanted to retrace what we have done, because those three things are everything in this audit related services chapter. Are you with me? Those three things are everything in this audit related service chapter. And I'll show it to you now, because it's always like, oh, sorry. It's always like Sana's wahala is too much. So let me show you audit related services. Abi, I'm highlighting them now. What is this? Review of data. Abi?
Yes.
Review of data. The second one is what? Agreed upon procedures. And the third one is what? Compilation.
Compilation.
So that's the thing. The thing about information or knowledge is that when you have it, nobody can take it away from you. And it is a child that lifts up his hand that they will carry. I try to simplify this thing as much as possible. Eh? Yes, now. So I know somebody in this class, the reason why they did not speak is, oh, I don't know it. But you will say what you think. Even from the name, it gives away some information. What I even expect, you were telling me that I was putting it on the screen. It was intentional. I wanted somebody to read the material and just say something. Okay? Please. This exam is not for the bravest. It is not, if you feel unrighteousness, you're just joining Zoom. If you don't interact, if you don't do the work that is required, like I said before, online class requires more attention. I have a friend, right, that did skills as online class. In professional, she traveled down to come and do professional because she was like, what she went through, she does not wish it for anybody. It's more work on your part. Because they say it's an online class does not mean that the tutor will come and open your head and put the book inside. It is your active interaction. It's very different for a course where you're not writing down. We have done, you see, Mr. Hussein was saying that we have about 16 topics and we're on the 8th one right now. Did he say 8? He said, yes, 8 have been, this is now the 9th one. So if you have 9 topics already done and you have 7 left, and then somebody is asking you question in chapter 1 and you cannot answer it and you still don't respond, what is supposed to happen? Okay, hopefully I don't get to talk about this again. Let's just move on. So audit related services, there's a distinction between audit and audit related services. Okay, and the distinction basically comes from the form of assurance, okay, on this engagement. while an audit comes with a reasonable level of assurance, it is not the same for while an audit comes with reasonable level of assurance, it is not the same for other forms of engagement. Okay, moving on. The objective of an audit is to enable the auditor to form an opinion on the FS, to say that to a large extent, this FS gives a true and fair view, right, of what has actually happened in that organization for that financial year. They now said that an audit gives a high, the audits are just revisions because there are things that at this point in our AAA we already know. Audit gives a high form of assurance, while a review basically or other audit related services come with a lower form of assurance. And that's why I wanted us to do a refresher of the meaning of review, agreed upon procedures, and compilation. So by the grace of God, I shall not be going back to it because you have shown me that you know it. And any other person that was quiet just means that maybe they are not interested in speaking at this time. So it's absolutely fine. If you want a reminder of that, you can listen to the chapter 1 class again, or listen to a few minutes back of this class where we are talking about the meaning of these 3 things. Now, in this chapter, the only difference is now that they streamlined on one particular one. They streamlined on one particular one. And what did they streamline on? They streamlined on a review engagement. So they said in a review engagement, the practitioner is being called to review a financial statement. The work performed in a review engagement is less detailed than the work for an audit. As a result, the level of assurance provided is more moderate than that of an audit. You see that we're just saying the same thing again and again. Now, where you will now see exam question is the 2 types of review. So audit related services are review compilations, review agreed upon procedures and compilation. Review engagement, there are now 2 major types of review. The first one is an attestation engagement, and the second one is a direct reporting engagement. What's an attestation engagement as a review? Attestation is just to attest to the fact that something has been done. In attestation engagement, the practitioner is engaged to attest to something. For example, the auditor may be asked to attest to certain procedures being followed. So he just says that, oh, have you prepared the accounts with the corresponding reporting standard? The auditor say, yes, this client has prepared the accounts with the corresponding reporting standard. From what he said, he did not say whether the account is correct. He just said that, he just attested to the fact that it has been prepared using the proper reporting framework. Okay, that's an attestation. Do I have a class?
Yes.
Yes, ma'am.
The second one we have is a direct reporting engagement. In a direct reporting engagement, a practitioner is engaged to provide a special report on some aspects of the client's firm. The report is prepared after the practitioner has carried out an independent examination on the financial information or other information that has been prepared or used by another third party. The practitioner will express an opinion, usually in a negative form. You see that this one is typically what we know, right, as review, where the practitioner will come, state his opinion on a special report, right, and he will express his opinion in a negative view, right? So that is similar to what we know. That's the original definition of a review, okay? In this topic, they now streamlined again on a direct reporting engagement that is called due diligence. They now streamlined again on what? A direct reporting engagement under review that is called what? Due diligence. Before we start to read all this plenty English, due diligence is just Dangote wants to buy First Bank. Dangote engages Soji. Soji, you're an accountant. Go to First Bank website. Go and download all their FS. I want you to do a review of First Bank to see whether it is worth my financial injection, right? To see whether there should be a potential acquisition or in quotes, it can also be a merger. Okay? So Soji goes, carry their financial information and does the level of independent examination that you should do. Ratios, trends, sensitivity analysis, checking whether it is worth the purchase price, you understand? Things like that. And it gives a report back to what? Dangote. Don't forget, it is still under a review. So the level of assurance that's coming from it is still moderate, you understand? And he will still express his opinion in a negative form. So that Dangote will not say that, it's the strategy that say I should go and buy First Bank. Do you understand the context?
Yes.
Okay, so let's read the material. Just give me a bit of your time. With the way it's even going, in like 1 hour, we'll be done. It's a very short chapter. Okay, so just give me your time. Okay. This is the most common reporting engagement. It refers to any engagement where the practitioner is engaged to make inquiries into the accounts of organization or activities of an entity. Due diligence work is commonly referred to in the context of merger and acquisition. Like I said, it happens more in mergers and acquisition. Okay, that's when they will want to call you to say, okay, this is what I'm looking at, and what are your reservations on this particular move. The objective is to find out everything that may be relevant about the target company in their operations, financial performance, financial position, future prospects. Due diligence does not involve test of control, nor does it involve substantive tests, because this is what makes an audit an audit. It is very scrutinizing. Okay, so due diligence does not involve test of control, nor does it involve substantive tests. Due diligence work is not a form of audit. Okay, the main objective of due diligence is to provide information that will allow the client to decide the desirability of a takeover. Exam question. The main objective of due diligence is to provide information. Okay, Dangote, this is what I think, this is what I think, this is what I think. Not this is what I think, right? Based on you don't say this is what I think. Based on my research, this is what we have found, this is what we have found, this is what you bring everything to him, and then you are just basically aiding him to make a decision in terms of the desirability of the merger or acquisition. Now, we said that an adverse due diligence report may therefore result in abandonment of takeover or merger. So it is not that when they send you out to do due diligence, it's not like every time your answer may be favorable, right? You can come back and with what you have shown them is like, oh, don't put your head, oh, don't even try it. You understand? So there's no pressure in court. You know how in audits we want to always have like a clean report. You understand? An unmodified report. For due diligence, you can come back and save the person from losing, or save that investor from losing their investment. Okay. So, exam question 2. What are the items to investigate in a due diligence? What are the items to investigate in a due diligence material? Just get that. Okay. The first one we have is financial performance and financial position. Okay. You review the financial performance and the what? Financial position. This is where I'm talking about ratios, analysis, cash flow, budget, profit forecast, their business plan. This due diligence is a very in-depth work, because you have to at least help that person to be able to make an informed decision. The second one we have is operational issues. Operational issues, you want to look into their contracts. Are they having issues with the government? You understand? What's happening to their raw materials? What's happening in their management team? Are they having issues meeting warranties to customers? You want to look at the news to see what people are saying about this company as well. You understand? You want to go through their audited reports and see what the numbers are looking like. The next one is management representation. Review management representation provided by the potential buyer, because they will have given you a form of writing that, okay, this is what we have, right? And they said, for example, there might be a written assurance that the target company is not subjected to any tax investigation or potential litigation. So these are just things that management will sign off that, okay, we can confirm that these things are not happening where we are. The fourth one is identification of assets. Okay, you want to make sure that the things that are in their book exist. There's even some level of due diligence where you will make the company aware that, okay, we're trying to make our research as well. So they have to make some information available, because I know somebody is thinking that, okay, so do you mean that the company will give you some information? Yes, the company too has to some certain extent give you some information that you need as well. Then we have, this should be identified and valued for inclusion in the consolidated financial statement of or financial position after acquisition. So that's what they are saying, that you must make sure that, let me tell you one major area that people used to fight, goodwill, right? You are saying that this is what our firm has accumulated, and then the person you have reached out to for that due diligence is checking the reasonableness, okay? Is checking if the goodwill has not impaired to even a larger extent than what the current company, and what used to happen for a lot of companies in ordinary cases when there's a merger or something, their goodwill will suffer a form of impairment. The ones that their goodwill appreciates is very little, okay? Take over, watch. Then number 5 now is what? The benefit and the cost of the takeover. This one is even the most important. Due diligence may also include an attempt to estimate the benefit from takeover and the cost savings that is going to arise from synergy. So if you're saying that, okay, how would First Bank help Dangote? You understand? You want to do cost, we're accountants now. From your PM, you know what we call cost and benefit analysis. Abi? So that is basically one of the items that need to be investigated in a due diligence. Also, we have benefits of using an audit firm to do due diligence. So, like I said, the example I gave, you have reached out to Soji, okay, to do your due diligence. But clients can take it a step higher to say, I want to use an accounting firm, an actual accounting firm, to do my due diligence. And what are the things? Why do people do this? Number one, they believe that when you hire an accounting firm, it saves work, it saves time than having your own present management like that. And going to be telling his team to go and do the due diligence. Okay. The second thing is that the practitioner is assigned to due diligence work, and you should have suitable experience. Somebody is telling you that, okay, they've done due diligence for about 15 companies. Is it your company that they will start doing error with? Okay. So that's another thing. The fact that this person has a suitable amount of experience in this context. Then we have using a professional firm to do due diligence may also help to reassure shareholders in the potential buyer that the acquisition was properly evaluated. So, perception is very important in the work that we do. You just want even the other party to feel like everything that you are doing is from a reasonable point of view. And that's one of the work that an accounting firm, when they don't like, okay, this is an accounting firm that is saying that the values that were put on these assets are not realistic and they cannot stand, okay? It helps them to understand that it's not from a political or emotional point of view, but it's really from what they are seeing on the financial statements. So we have principles to apply in review engagements. Principles to apply in review engagements. So this is where we have the International Standards on Review Engagements, ISRE 2400. You should even get the list of this in one particular topic. What's that topic now? Is it not where they listed out the different standards? International standards on assurance engagement, international standards on audit-related services engagements. There are different ones. So when it comes to review, there's also an international standards on review engagements, ISRE 2400. It's a very straightforward question, but when students get to the exam one, they see ISRE 2400, their day is already spoiled. They're like, hey, this question is hard. But no, they're asking you simple things. So they can ask you that, what are the principles to apply when reviewing an engagement? So according to ISRE 2400, that's where ICAN will put the exam. It sets out the principle that should be reviewed. What are the principles? Number one, comply with relevant code of ethics. This is nothing different from what we have said in class. Number two, plan and perform the work with an attitude of professional skepticism. These are like the considerations normally in audit planning. Number three is now obtain sufficient and appropriate audit evidence, primarily through inquiry and analytical procedure. So because you are not in that organization, you have to do a lot of questions. And what's analytical procedures? When you do your audit evidence, you see that analytical procedures are the efforts that the auditor use to check for the plausible relationship that exists between financial and non-financial data. In this context, it's just your ratios, your trends. Those things are analytical procedures. Now, the last part of this chapter is now reporting on the end of a review engagement. Okay? When a review engagement has ended, what's supposed to happen? And you already know that any kind of work that we do in audit and assurance, no matter the kind of work that it is, it will always have a report. Okay? The outcome of a reviewed engagement will be a report from the practitioner. The practitioner, the outcome of a reviewed engagement will be a report from the practitioner. The report will be in two main forms, depending on whether, number one, no matter has come to the conclusion of the practitioner. You know how we have, okay, when you do audit report, there are two types of reports. We have an unmodified report and a modified report. An unmodified report is a report that follows the standard wording, that does not require any form of change to that report. Okay? So when no matter has, so when it comes to a review, ordinarily you express your opinion in a negative assurance. No matter has come to the attention of the practitioner, indicating a true and fair view not presented. That's the negative assurance. Some matters have come to the attention of the practitioner, indicating a true and fair view might not have been. So that's like example, like modifying what you would typically do, which is a negative assurance. Modifying it to say, but I've really seen some things though that we think that you should really think about before you make up your mind, or whether you want to move on with this merger or whether you want to move on with this acquisition. Are you guys with me?
Yes.
That was only one response. Is there only one person that is with me?
Yeah, we are with him, ma'am. Yes.
Okay. So moving on. When matters have come to the practitioner's attention, as in B above, suggesting a material misstatement, the reporting requirements are similar to those in ISA 700 for a qualified external report. Okay, so when they say the results are similar, ISA 700 talks about modifying different types of modified reports. I don't want to scatter your head, but the major type of opinion in a modified report are qualified opinion, adverse opinion, and a disclaimer opinion. Okay, so you're basically trying to say that when some matters have come to your attention, the flow of your report will be similar to what you have in the ISA 700 for a qualified report, where you put that, in our opinion, except for this particular matter, we believe that this financial report shows a true and fair view, right? Or it does not indicate to us that true and fair view has not been presented. The auditor will need to describe the matters. Okay? The auditor will need to describe the matters that are involved, assess the impact of the matter, okay, so we have that the auditor will need to describe the matters involved, assess the impact of the matter, whether it is material or pervasive, and then he will distinguish between disagreements. He will distinguish between disagreements with management and limitation in scope. Oh, this is already thick audit reports, okay? Don't worry, it's a full topic on it. So when you do audit reports, these terminologies will make sense to you. Okay, that's one of the reasons why I'm saying that I'm going to advise that Mr. Bisalu starts to take this period, because all these prevailing topics before these ones are very, very essential. Okay. So let's just go to our past questions. It's actually a very short topic. Let's read it. For example, they showed us an example of a review report. So let's read it. We have reviewed the accompanying balance sheet of ABC Company as at 31st December 20XX, the income statement, the statement of changes in equity, and the cash flow statement for the year ended. These financial statements are the responsibility of the company's management. Our responsibility is to issue a report on these financial statements based on our review. Management has informed us that inventory has been stated as its costs, which is in excess of net realizable value. Management computation, which we have reviewed, showed that inventory was valued at lower of cost and net realizable value as required in international accounting standards. It would have decreased by a certain level, and the income and shareholder equity would have also decreased by a certain level. Based on our review, except for the overstatement of inventory, as described in the previous paragraph, nothing has come to our attention for us to believe that the accompanying financial statements do not give a true and fair view in all material respects. Okay, so then you put the date and the address. So it's a straightforward. This is typically the way your review, will come. But they'll say nothing has come to our opinion, because it's a negative assurance kind of review. So let's look at the part 5. audit related services, just 3 times. So let's check May 2015, question 6. So forensic audit, what is it they are showing here is forensic audit, and it's under assurance services, not. People also make a few mistakes. Can you see? Then May 2019, question 2. Very sweet topic, so that I can have refused to ask. May 2019, question 2. Okay, so this is a full question on due diligence. Are you with me? Explain the concept of due diligence, 2 marks. Discuss items to be investigated in a due diligence, 5 marks, and there are 5 of them. Explain the benefits of using an audit firm for due diligence, 5 marks. Discuss the objective of ISRE 2400, 5 marks. Explain the principle to be applied in a review as set out by ISRE 2400. Let me go and show you again, because somebody will say they've not seen it before. What is due diligence? Due diligence is the most common form of direct reporting, where you engage a practitioner to make inquiries into the account of another entity, usually in the context of a merger or a takeover. Okay. Second question.
Please, what year is this question?
May 2019 question.
May 2019.
Question 2.
Okay, that's fine.
So, discuss the items to be investigated in the due diligence. The answers are here. Financial performance, operational issues, management representation, identification of assets, and benefit and cost of takeover. Explain the benefit of using an audit firm for an audit engagement. Saving time of management, the practitioner has a suitable experience. Using the professional firm to do due diligence may also reassure the shareholders that it has been properly evaluated. Discuss the objective of the International Standards on Review engagements. The International Standards on Review engagement has basically the objective to make sure that you have been done using the right standard. And it's set as a general principle at which the review should be applied. So when they say that what are the principles to apply, the first one is to comply with relevant codes, to plan and perform the work with an attitude of professional skepticism, recognizing misstatements, and to obtain sufficient and appropriate evidence, primarily through inquiry and analytics. So that's D and E, a full 20 marks question just on due diligence. Let's check May 2022 question 2. Prepare a document to give an explanatory meaning to the term due diligence. So it's the A part of the question. So they are basically asking you, and it is a 12 marks question. Subsequently, discuss items to investigate in a due diligence exercise. So this is still the answer. This is still the answer. The 5. Financial performance, operational issues, management representation, identification of assets, cost and benefits of takeover. And you still explain what so they're just asking you what is due diligence and explain the items to discuss in a due diligence. 8 marks, a bit 12 marks question. So the write-up is for the B part of the question. We talk about how to recognize, measure, and disclose leads as required by IFRS 1. That one is under audit evidences. So you can see that it's a very direct chapter. Go over it again because we still have time. Other audit related are just services that are not audits but are related to audit. There are 3 of them: a review, an agreed upon procedure, and a compilation. Okay. Under review, we now have two types: an attestation engagement and a direct reporting engagement. Under direct reporting engagement, the most common type is now due diligence. Under due diligence, we have the major objective, the items to investigate, the benefit of using audit firms for due diligence, the principles to apply to due diligence, and what the international standards on review engagement has said should be the general principle. At the end of the day, when due diligence has been concluded, a report will be given to the company that has engaged you, right? To say they want you to do this due diligence engagements with them. So can you see? If I'm you now, I can just draw a table where you are, audit related services, divide them into 3. You understand? These things make your work easy. So my people, does anybody have any question for me? Silence. Does anybody have any question for me?
None
Hello?
from my end. None from my end.
So Mercy, everything you understand, they should, if I should bring 100-mark question on audit related services, you know it's well enough.
Yes, ma'am.
That's very good. Faith, you have joined this class since we started. I've not heard your voice at all. Hello, Faith.
I'm here.
So no questions from your end, so.
No question.
Okay. I can see an Ogene Tega. I think I've seen your name before, but you're not very frequent. You joined the class late. So did you get, hope you didn't miss a large part of the class?
I did, but I will go back and watch the video.
Okay. Okay. So in the absence of nothing, my people, we have justified the means. Okay. So let me look at the chat. Yes, please just send me a DM. The reason is because this is a different centers platform, so you can't share that kind of material, for context. So just send me a hi. I'll forward the material to you. That's okay.
Thank you, madam.
Thank you, everyone. That will be all for now. Do enjoy the rest of your evening. I know that you must have had a long day. So I will send a message to Mr. Desalu right now so that I can tell you guys the next steps as we move
Okay,
forward.
thank you very much.